In midday trade on this Monday afternoon, we're seeing the major U.S. equities trade higher. Crude oil futures are also up in today's trading session, but we do have to keep in mind that it is the final trading session for February. Joining me now is Matt Cheslock of Virtu Financial. Good afternoon. Thanks for joining me.
Anytime. Thank you.
Well, we're seeing crude oil higher. We got weaker than expected U.S. data, but overnight we did get some disappointment out from the G20, and we saw the move out from the PBOC. So overall, what are we seeing today?
I think we're climbing a wall of worry. We see gold up today, we see oil up today, we see the equity market up. So we really are in a bit of a quandary as far as what to look for going forward. The G20 did not provide anything substantial out of us. You know, we saw a weak overnight market in China, which had been one of the precursors to a down market, but that's not the case anymore. Oil has rallied back hard, so we're really confused down here to say that, to tell you the truth. But it's the wall of worry right now. Things are looking higher, and oil has led us higher, and we've been following lockstep with them for over the last month.
And Matt, at the end of this week, we will be getting the jobs report since March is finally kicking off. So what do you expect to see at the end of this week?
Well, I would expect the Fed to probably have some more clarity about what they're going to do in the second half of the year with this data. The numbers that we've gotten have been dovish as far as no raises, at least for the first 6 months. They have gotten some inflationary numbers that were positive for a rate increase and substantiate some of their beliefs as we go forward. But I would anticipate nothing for the first 6 months, regardless of what this number is, and I would look for the latter half maybe for a raise or two.
And of course, we have to take a look at rates around the globe. Negative interest rates have been a hot topic recently, given what we're seeing out from other central banks. Now, today we saw the euro-dollar fall below 109, and that came on the heels of that weaker than expected CPI figure. But in terms of global rates, what do you expect?
I just can't, if you look in some of the global rates, negative rates are just, there's no long-term data to support them. If we didn't go negative rates in 2008, I can't imagine the U.S. is going to do it. I think the fact that we can remain on course and maybe some raises is good for the economy. And if the economic data supports it, the Fed will do it. And they've said that all along, if the economic data supports it. As far as the worldwide, they're a little bit behind us. The U.S. is definitely ahead as far as, the rates go, and that will continue to be the case. So it's going to bear in mind what the U.S. is going to do, and I think everyone else is going to follow suit after that.
And last but not least, before I let you go, Matt, I want to ask you about sectors. In today's trading session, we're seeing basic materials as well as utilities trade higher. Are you bullish or bearish on any?
Well, it's funny. Those are generally defensive names. So in this market, we're seeing everything up today. As I mentioned earlier, gold, which has been historically a defensive name, being up, oil being up. So some of the defensive names are the strongest gainers, and they're leading us higher. We still need to find a leadership group other than the defensive plays to take us to the next level. We may find that into a new month, but I would imagine everyone today will be anticipating the end of March, close it out, and if we can get close to flat, for the month and some positive momentum, that would be something to look forward to in March.
Well, Matt, they do say March comes in like a lion and goes out like a lamb, so we'll see what plays out in the equity markets. Thanks for joining me.
Anytime. Thank you.